Banks and lenders will cripple you if you don't know this one thing about lending. One of the big takeaways from the Build Wealth workshop just a few weeks ago in Nashville was the fact that I went over what banks are looking for to give you more money to be able to execute and decrease the amount of out-of-pocket costs and expenses for each and every investment that you take down. Now, it allows you for more bandwidth, larger execution, more deal flow, and your ability to execute on larger projects as you actually grow and scale. But you can't do this if you don't know this one thing about lending. And it's the biggest mistake most investors make. So I extracted a short 15-minute segment of the Build Wealth workshop for your benefit to take advantage and understand how to decrease your overall expenses, out-of-pocket costs, and increase your leverage for larger bandwidth and ultimately larger profits.
We already have the project penciling. Since the project already penciled, now we're just value engineering to move our buckets of money around to reduce our equity stack. And what it also does for your project is now I have $500,000 less of what? Debt service. You always have to look at it from a stabilization standpoint of how am I going to get my stabilized loan? How am I going to stabilize this asset upon completion? Make sense? Okay, now, when you go in and you look at it from a stabilized asset perspective, in today's market with cap rates, sometimes you have to just take the base of your land and they give you zero for it. But they do give you a credit for what you paid for it, plus all the fees. So if you paid all your architectures, your engineering, you pay for all your soft costs, that $50,000, that's also going to go towards the down payment proceeds of your loan to cost value. They'll credit you for that. Sometimes we'll go in and we'll send them an invoice for another $50,000 in management and pre-development fees. And then they'll give us credit for pre-development fees. It's just paper, guys. We didn't take the draw on the $50,000, but we invoiced it because I'm not going to work for free. But I want the credit to go towards my down payment. Does that make sense? So I don't really have the $50,000 out of my pocket. I have it on a piece of paper that was my invoice. It's all pushing paper. Does that make sense? Do I have the right to not take the payment and invest my payment into the asset for free? Can I work for free? Can I choose to do that? Yeah. And the bank can't tell me nothing for working for free. They already have my financials, but I could invoice for it so I can go in and say, hey, we have $50,000. I was on every friggin' meeting every friggin' week for the last 7 months to get this damn thing out of the bank. Somebody has to pay for that. And I'm going to invoice that to the bank for $50,000. So you guys know where I say you take your equity and you invest it into your down payment? That's part of it, guys. So this is where I pull the covers off of the equity point, right? Where it makes sense because the bank is going to give you credits for the equity. They're not just going to say, okay, the value's there, you created all this equity anymore. That's not the way banks are working. They're smarter than that and they're tougher than that. They weren't smarter than that when times are good, because when times are good and the values are abundant, they'll give you the credit on the land. You don't even have to hide it from them. You just go in and you give them the value of the land. You tell them I paid for this. What makes it worth up to $1 million more is that I have a year into the land. It's a year older. The market is stimulated since then. It's fully entitled. Now it's worth $2 million. Okay. And then they give you a $2 million credit. And now you don't have to come to the table with nothing. Maybe a little bit of interest reserve, but that's it. Okay. And that's it. In today's market, they're going to give you a credit towards it. So now when we do our underwriting and we're looking at our multifamily stuff, we're inflating it just like we do our residential, where we do one for execution and one for the bank. Same way. Because on the front end, guys, on this $1 million right here, we're going to go in and we're going to inflate the cost of the dirt, the cost of the foundation, the cost of the framing, and we're going to get credits for that stuff. I need to get a credit on all of my down payment money as early as possible, because the earlier I get my credits, the sooner I can have the bank draws start paying my subcontractors. Does that make sense? So if I already have $50,000 of a credit out of that $200,000, and then I got $50,000 into entitlements, that's already $100,000. So that just took the proceed amount down to $100,000. Now, maybe I could push my land value up by another $50,000 without it affecting my cost. So maybe I take another $50,000 appreciated value on my land to be able to absorb another $50,000 on the actual $200,000 credit that the bank is going to give me. But I have to underwrite it to see if it can afford it. And if it does, or I'm going to value engineer the cost in my build and take it from my plumbers, from my roofers, from somebody to say $50,000, so that now it can afford it. So now I can take from my plumbers $20,000, from my electricians $20,000, and then I go in and I put that extra $50,000 that I saved from value engineering, and I inflate the cost of my land, that $50,000, to take the credit from that $50,000 against that $200,000. Look, guys, this is super important.
You do from a different LLC to
Yeah, sometimes I'll invoice it from a different project, or sometimes I just invoice it internally. You know, I just tell them, hey, we've been in pre-construction for the last friggin' year. I have employees. They got to get paid. You know what I mean? I might be my own employee. It doesn't matter. I need to get paid. You're employees. You're one of them. So they need to get paid. So even if it's from the same entity, doesn't matter. They need to get paid. You're just going to put an invoice together, and that invoice is going to go in. You know, talk to Ramez on how Ramez and I did at Kirkland. We had $250,000 on a $24 million project, guys. We had $200,000 out of pocket each, and we exited that in the first 3 months. Okay, so I was into a $24 million project with $100,000 total through the whole project out of my own pocket. 100 grand, okay? Doing this right here, just getting credits, okay? So you guys hear me on stage talk about the equity. I don't have time to break it down like this in front of a room. So I'm spending the time now. That's why you guys are here. Now, when you go in, we have $50,000 that we still have to absorb before the bank allows us to do this. So what you do is you overinflate your dirt in management fees, in retail costs by an additional 10K. You do a demolition. If there was demolition on that lot, you increase it by another 15K. If you're doing your foundations, you increase it by another 15K. And then you do your lumber package, your pry out, you increase it by another 5K. These are distributions. You don't want to money launder, guys. If you money launder, you go to prison, okay? You take in that money, it's in your project. They approved your budget sheet. You gave that. You disclosed that budget sheet to the bank. The bank approved your budget and the value of that asset based on the pro forma and the budget that you're using. Through their approvals, doesn't matter how your buckets fill. Your underwriting's always going to be jacked up. I always have to do a redistribution log on every single project. Don't worry about it. No matter how much experience you have, your budget will never fall perfectly into your budget numbers, ever. Ever. So I remember working with this girl, Lady Kim from Genesis Capital. She drove me fucking crazy. And she's like, you're out of money. We go in for a draw. We'd give her it for $2 million and she'd give me like $850,000. I'm like, oh, like, I need my $2 million. We're like there. She said, well, your bucket still makes sense. And she was so uptight about the buckets that we'd have to go back in, pay them our $150 for a reinspection, and we used to have to go adjust all our buckets. So now, after like the third month, we caught on to it. So we were going, everything came back and fell back on my plate from the office. And I was like, guys, when you invoice it, if you don't word it right, like for insurance purposes, almost same bullshit. If you don't word it perfectly right, they decide what bucket it's going to come out of. And if they pick the wrong bucket for you and they draw from it, they just don't give you the money. So you have to go back in and you have to make sure that you're very clear on what bucket it comes out of. So before we would hand in our draws to the bank, we would look at where we were on our budget sheet. You'll have a software that the bank will do. You'll use this software. It'll show you and they'll send it to you. Hey, can you send us our percentage of our draws? And you send your spreadsheet. They come to you. You know where you have money. Sometimes I'll have extra money in striping a parking lot that I don't need. Or I have an extra $100,000 on a parking lot that I don't need. Or an extra $100,000 in dirt work that I never used, but dirt work's over. So how do I get the dirt work out? Well, there's final grades. I haven't finished my landscaping yet. So all of a sudden, I need $100,000 to finish my landscaping. Okay, so ironically enough, even though I'm 5 months past grading, now I need some grade work money to finish my landscaping. I'll adjust my buckets to pull that $100,000 because I was short on plumbing. Does that make sense? Okay, so you have the right to adjust. So when I tell you guys, you have to value engineer your assets, what you're doing is in the front end, you're going in and value engineering your big trades, your roof, your framing, your plumbing, your electrical, and you're trying to get these down where there's smarter ways. So sometimes I'll simply take my engineer's plans and I'll say, hey, I'll go to the plumbers. Can we bring this down? And my plumber sometimes say, why? Like this just happened to us on our Rio Rancho project. He goes, why are you using 8-inch line throughout the entire building for your sewers? I didn't catch it. There's too much shit to catch. And I go, what do you mean 8-inch lines? I said, that's the main feed. He goes, no, bro, the engineer has it 8-inch lines through the whole damn build. It's all 8-inch lines. I opened up the prints. He showed me. I go, holy shit. And the engineers will do this shit because they know that their calculations go, if you flush your toilets and everything's an 8-inch line, the shit's gonna get to the sewer. But it could start with a 2-inch line, go to a 3-inch line, go to a 4-inch line, and ultimately get to a 6-inch line, down to an 8-inch line. You don't have to build the whole damn thing at 8 inches. That one change alone, $170,000 savings to build a stack. It's called a stack. The water lines, he knew he'd get water pressure. We had enough pressure for him to run 1.25-inch lines to the entire building, including the fixtures. You ever walked into a sink with a 1.25-inch line coming out? You ever walk in and saw a toilet with a 1.25-inch line? You want a duvet that excites you? Get that one. Fuck. What are you doing? You trying to send your duvet to France? Can we use a half-inch line here? We built a stack back down, $70,000 savings. $70,000 savings, guys. You can go in and talk to your trades professionals when you go to bid and you ask them, you work them against each other. How do I save? How do we bring this down? You don't ask them to come down on their price. You ask them, how do I work with you? How do we get this down? We did the same thing on the foundation. These guys who went in and did these monolithic pours, I looked at it and I said, I wasn't the GC, but I own a concrete company. And I said, hey, Damien, I want to see if I could bring down the concrete cost on the foundation. We got into it in my office. It took us 2 friggin' weeks to bid the product. My whole team was like, Jerome, what's taking so long? You got the concrete bid? They think I'm like magical, like I'm any different than any other subcontractor. They're like, magic pixie dust. There's the price. So we get into looking at these friggin' foundations. It's my project, mind you. We had already had the bids. I got in looking at it and I was like, holy shit. I was like, this shit's gonna take me 2 weeks to form because of all the stem walls. We have one elevation that starts You look at the land, it looks like a gentle slope. But when you level foundations, it's a 5-foot drop from one side to the other side. So we have these invisible stem walls that go through the whole build. Those stem walls were done with forms on monolithic pours for concrete. It's a 2-week form time. You got to frame all that shit up. You got to tie it. You got to put all the rebar in there, tie all that. 2 weeks worth of labor, guys, for a full concrete crew. These guys are making $25 an hour, plus insurance, 941s, everything, the whole 9 yards. So we get into it. I go, fuck, this is crazy. Why don't we just do this at a block? And so we went back into the engineer. I called my structural engineer and said, I will have an EFI. We want to do a revision to the plans. We're going to go in and I want to do this with CMU. We're going to set the CMU and then we're going to pour these monolithic. So we'll just build stem walls because the stem walls will go in quicker than the forms will. Then when we do the forms, we just pour the foundations flat. We landed up saving $230,000 on the foundation just by changing that one thing, guys. $230,000, okay? When we did this, guess what we did? We took that money and we inflated our land value. We had already in banking, we already knew the numbers worked. So we knew the numbers worked. So to be able to get our cash reduction, so we had less out of pocket, we took those value engineer numbers and we took from this and we lowered our proceeds of equity because we inflated the cost of the land on what we saved on the plumbing and on the foundation. So now on our equity raise, we just saved close to $500,000 that we don't have to bring now in equity because now we're able to get that in our land price. Does that make sense? Because we already have the project penciling. Since the project already penciled, now we're just value engineering to move our buckets of money around to reduce our equity stack. And what it also does for your project is now I have $500,000 less of what? Debt service. So now it just reduces the overall stress on my project entirely because that cost, that invisible cost, which wasn't invisible, now doesn't have debt service on it by another $500,000 that I don't have 8% interest annualized on a 2-year build.
You a bad motherfucker.
You see what I'm saying? Now do you know why you're here? Click and subscribe to my YouTube channel right now. Pound that thumbs up button and continue compounding your success.